The crypto winter is upon us. Bitcoins now come down over 70% to the cycle peak of 2017 of $20,000. So is this the time to be running for the hills and cutting our losses, or have we moved into the investment opportunity of a lifetime? Well, we'll be getting the latest from Kevin O'Leary, as he recently appeared on Bankless, linked to below, and he'll be answering some very important questions for all crypto investors. This includes, now before we allocate any more money into crypto, does crypto actually have any value, or is it just one huge speculation machine? Then he explains that the big institutional money still has zero allocated, but this is going to change very soon. And then we'll finish up with some tips on how to handle the volatility, as 60 to 80% drawdowns can be brutal. However, he explains that this has happened before, long before crypto was even here. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, before we start loading the boat into crypto while prices are getting smashed, we need to make sure that it's not a sinking ship. So, is crypto just one big speculation machine, or does it actually have intrinsic value?
Because the largest economy on earth is financial services. I think crypto will be the 12th sector of the economy within 10 years because it adds so much liquidity, so much productivity, so much transparency, so much auditability. It's so much better than what we're doing right now, which is so expensive and so slow. If I want to transfer capital over to Zurich to buy Nestle stock in Swiss francs, it takes me days. And it costs me a fortune, and it's incredibly inefficient. I could do it in 2 seconds with a stable coin, and I can't yet because we don't have policy on both sides of the ocean that let me do that, but it's coming one day. And I think crypto and blockchain and the services and financial transactions, microtransactions, all of it are going to lend itself to this blockchain auditability, transparency, the ledger system. It all makes sense to me. And I think regulators are starting to figure that out. I have no idea which ones will win over the next 5 years, but I don't need them all to win. I just need a few to win. And that's what diversification is all about. And I've made some investments in the infrastructure. You know that old adage in the gold rush, you were better owning and selling picks and shovels and jeans than you were trying to find gold, because that was very hard to do. The infrastructure of crypto are companies like FTX, I'm a shareholder, Circle, I'm a shareholder, Wonderfy, I'm a shareholder, Immutable Holdings, I'm a shareholder. I've given money to all of these projects because they make a lot of sense to me and I use them all. And they're centralized, decentralized. There's stable coins in there. There's the FTX platform, which is the first compliant institutional platform I can find that my auditors and my compliance department finally agree to let me use to store value.
So a great point that he made is that the largest sector in the economy is financial services. And it just so happens that crypto is better, it's faster, it's cheaper, it's more efficient to what's already in place. And then add to that the productivity, the liquidity, the transparency, the auditability, as sending money across the pond right now takes days to clear and costs a small fortune. And as yes, it is still early days in crypto, so he simply invests in a wide range of cryptos, as it's just too early to say which ones are going to be the big winners. Okay, next up, Kevin explains that the big money, and I'm talking the really big institutional money, have not even started allocating yet. They have a big fat zero. And after this happens, crypto is going to soar.
The majority of invested capital on earth is held by sovereign and pension plans, about 90+% of it. They own zero crypto, nothing. And so for all the excitement about Bitcoin, 800 billion, that is absolutely a giant nothing burger. It is totally irrelevant. It's not held by any institutions that matter. Now, I'm an indexer, and I've talked about this many, many times. There's many indexers in the world, but we service sovereign funds, pension plans. Let's say you're an oil-rich country in the Middle East. You're making 250 million cash a day, US dollars, in oil revenues, you don't want to reinvest in oil. You want to invest in every other sector. So they'll go to an indexer like me and say, index the S&P 500, less energy, less airlines. That's the kind of index we do. So we see these fund flows, trillions of dollars of fund flows every year just going through the system. Indexers see that every 24 hours. And I always ask these institutions and these sovereign funds, what allocation would you put into Bitcoin? Just one. Bitcoin, which is the granddaddy digital asset. Everybody knows that. What would you allocate if you could? And they said, well, we can't because our compliance department won't allow it, because the SEC hasn't ruled on it yet, and Larry Fink doesn't like it, and he's our biggest money manager, and all those other reasons. But they would allocate 50 to 100 basis points. Now, when you're running a $1 trillion mandate or an $800 billion mandate, which is some of the size of these funds, that's a ton of money. And that's a huge amount of demand that would come into the market. And as Bitcoin prices went past that 1% allocation, let's say, they'd sell it back down to 1%. But just importantly, if it dropped below 1%, they'd buy it back up. So there'd be an eternal bid forever. The volatility would drop dramatically. There'd be price appreciation in Bitcoin. It would be good for everybody involved in crypto. But we can't do it without policy. And so everybody should just get off this, let's be rogue, let's be crypto cowboys. Forget all that crap. It's time to get this real and get a tremendous amount of capital going into crypto because it's policy and it gets regulated and it's good for everybody.
And so the big monster whale money have zero allocated to crypto, and they're unable to do so until this pesky policy is in place. And he mentions there are trillions of dollars of fund flows going through the system. And what do you think the entire crypto market is worth right now? Well, as of right now, it's not even $1 trillion. So as Kevin says, it's a nothing burger. Okay, and to finish up, how do we deal with the volatility? Now, volatility to the upside, I think we can all agree is pretty good. Seeing our portfolio shoot up is a great experience. However, volatility to the downside can be extremely difficult to deal with, especially if you've over allocated. Well, Mr. Leary explains that this isn't the first time he's had to deal with this extreme volatility. It has happened before with stocks. Now, can you guess which company he is referring to? Take a guess. 3, 2, 1.
Well, I give an example that everybody can relate to, because in the early years of Amazon 18 years ago, I was a shareholder both in the equity and in the preference shares they used to have in those days. That stock corrected every 12 to 18 months between 38 and 58% every single year, over and over and over again. People just couldn't get their heads around what Amazon was doing. And it continued that way for a decade. It's no different than what's going on right now with Bitcoin and other cryptocurrencies, because there's no institutional demand yet for the product. People keep saying institutions are involved, but they're not at all. But the point is, as an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. And that's going to happen sometime Jan, Feb, March. And so I want to be positioned before then. You don't have to, but I think it's the way to go in terms of being early and nascent. It's like being involved in the internet in its most early days. Same thing is going on here. Long term, it's a great investment. But boy, volatility, yeah, it's tough. 50% up, 50% down, 60% swings. Well, that was Amazon 12, 15 years ago. Now it's Bitcoin today.
The crypto market is knee-deep in another crypto winter. Bitcoin has crashed down to its prior market peak, and the altcoins have been crushed. The question is this a sinking ship or an opportunity of a lifetime? Well, Shark Tank's Kevin O'Leary does believe that crypto will become the 12th sector of the S&P, and believes it does bring a lot of value to the marketplace, especially financial services. He says it's faster, it's better, it's cheaper, it's more productive, it's more efficient, it's more auditable, and more transparent. He says legislation will be coming and the key dates are January, February and March next year, and this will open up the door to the big money, the big sovereign wealth funds. And these guys make hundreds of millions of dollars each and every day, and they're always looking to diversify. He gave a great example that Amazon used to correct 40 to 60% every single year, and a key point is that you want to have a position before policy gets put in place. So there you are, guys. Hope you enjoyed. Now the big question is, do you feel bullish or bearish right now, or are you a bit swinging back and forth? Well, just remember these feelings for next time we're in a bull market cycle. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.